Welcome to the Indices, and here we're looking at the US 10-year notes, and as pointing out yesterday, we were looking for a move up here to complete this little fifth wave up here. So we'll see this market stall, may not pull back this far, but we'll see it stall from here. But as the notes push up, then stock is going to push down. It's pretty simple in those terms. So this is just the 1 hour chart. On the daily chart for this market, we can see it in this picture here. So what I'd like to do is just trace out the larger structure here that we're looking at for the notes to move up. So we've got wave 1, wave 2, we've probably got wave 3 up to here somewhere, and wave 4 and wave 5. And then this should be the end of an A and a B and a C rally, and then we move down. So it's when this here tops out here, then the stock market will have its low in terms of the US market. So we can see when we look at the S&P 500 here that currently the move down through here is in 3 waves, but it's likely to turn into 5 waves, which will be a retest of the 1872, 1875 area, and then move down. So if we see a move down to 1850 here, that will give us 5 waves down from the high, and then we'd have to be looking at a counter trend that may pull back to the 72 or back up to supply area up through here, but a 5-3-5 structure, and then we'd see another move down through here coming in lower. So while those notes are moving up, then this is moving down. And this is the same for, as I think I mentioned yesterday, with the yields as well, US yields. So as you can see here, I mean, this is just updated end of day. So I don't know what on this chart, it's not showing you what's been updated from last night, but just a daily chart, just a rough sort of guide on things, is that, you know, we're looking while the yields are they're doing the opposite. So, I mean, they'll be following stock. So basically what we're looking for here is we've had a nice impulse wave up through here, and we're looking at an ABC correction through here. So what we need to work out is basically this ABC here, but looking for 5 waves in this structure through here. So look, it may not come down this far through here, but it'll certainly toy with the medium level here, 250. So we need to work out what the structure is from that high there, working down to the low area through here. It may not be finished. I would expect that that there would be equality between wave A here and wave C here. Okay, so that's sort of what we're looking at, but anyway, more time on that. So yes, look, this is bigger picture stuff here. Further to the downside, it's the same with the Dow Jones as well. Just looking at the 1 hour chart here, if it's going to follow the S&P, look, currently the move down, we can call it an ABC correction here in terms of an A and a B and a C, but I think that we're likely to have this is a wave 3, a wave 4 here, and then wave 5 down through to here. And then once we get wave 5 down to here, then we'll get a 3-wave retest back to the 650 area, and then down again from that point there. So it really depends on what's going to happen overnight with this particular structure. As always with bear markets or bear moves down, the first leg down, it's always good just to observe it, to see if it's 3 waves or 5 waves, because then you've got out of the 12 correctional patterns, you can pretty much just halve them, turn them into 6 patterns from that point. It does make life a little bit easier, so let's just sort of wait for that. I mean, most markets have turned as well. I mean, a lot of the commodities have been sort of turning down, and it's also turning on the full moon, whatever that means. But yeah, the DAX as well. Well, yeah, so we have to call this in here at 9.8 for the time being. 8th profit-taking number, so I should have expected a larger correctional pattern from here, but I was expecting a correctional pattern from here. I was expecting a little first high above the level, and then an A and a B and a C, but this is just the way that it panned out, so that's fine too. This move down here will be the same pattern as the S&P 500 as well, so we'll be looking at an impulse wave coming down through here in terms of 1, 2, third wave now, fourth wave bouncing off the 96, and then a three-wave retracement back 50-60%, and then a possible move lower from here as well. That's if we make new lows from this point here. And the FTSE is the same, or slightly different, but the same. I've had a good run on this one as well. I mean, we've been long in this market since 6672 and 6720 and 68 and 683. So, you know, we've had a good run all the way up through here, and we've been stopped out in here. So I think we've done a good effort there. But yeah, so this correctional pattern here, same as the other markets, can get larger from this point. Now, so we'll just leave this alone for a while, and let's just see how, if we get 5 waves down, then we'll get 3 back up, and then we'll look to short that market from that point. But let's just allow it to unfold first. The Australian market has been quite resilient, actually, and it's been sluggish, as you know, for quite some time. But that sluggishness has helped it stay in place here as well. So a couple of important things here is that you know, this whole count here, as mentioned yesterday, here is still in a sort of ABC pattern. I'm still looking upside for it, but it could certainly roll over and move much lower from here as well. So some important points here is that this particular low here, the little pattern that we've been looking at on the other markets, and this is it here just on a 4-minute chart here, but from this high up here at 511, the move down through here so far is down for 5 waves, and then this could be done as an A and a B and a C wave through to here, and if that's the case, then we'll move up from there. But if this low gets taken out here at the 54.60, then we're looking at 5 waves. We're looking at this being 1, 2, 3, 4, and then 5 down to 54.50, if that's going to be the case. So you know, if we get 5 waves down, then we're going to get 3-wave bounce, and then we're going to get another 5 down. Okay, so that's that side of it. Really, there's nothing more to sort of say about it. We just really need to see what occurs. I also need to point out too, if we go to CBA here, if let me find my watch list on the side over here, just bear with me for a second. It's a good time to sort of reassess this situation here as well. So what we've been working through is we've been working through this particular pattern here, and what we'd noted is from here we're looking at this as an A and a B and a C. So then we were looking for 5 waves up from this low here, essentially to make a new high above this high here, okay, which will be at the 80 there. Now, we basically have those 5 waves in play now. I'm just going to sort of open them up a little bit. You know, we've been following this. So essentially we're looking at wave 1 to here, and then wave 2 to here. All right, and then we're looking at, just open this up a little bit further. I don't want to take too much of your time up, but what I'm sort of really alluding to is that this particular 5-wave structure, we're looking at this being, let's just go over it, wave 1, ABC for wave 2, okay? So then we're looking for wave 3 to go up, and you know wave 3 is mostly the longest wave structure and normally reasonably easy to count, and so we're looking at it like this here in terms of 1, 2, 3, A, B, C for 4, and then up for 5 for the top of the 3rd wave, then the 4th wave, and then the 5th wave here. Okay, so look, there may be, if you want to pull it apart, there will be 5 waves in here, so it may go up a little bit further. But the main point is that we now have 5 waves in here, and this market could end at any stage here. So this would be in line with a larger correction across the market, generally speaking. So yeah, so let's just, you know, just pointing that out. So we have a lot of long trades, and you probably have long trades in banks and so forth. So yeah, you know, this very shortly here we'll have a top here, and then we'll see a larger picture sort of unfold. So if I do it from there, this will sort of, whatever distance it travels up there, then you can expect that to come down here as well. So anyway, that's just a good blueprint for our markets. Alrighty. So just to sort of finish off here a little bit, if our local markets don't take this low out here, right, and the market, wiggles a bit and then moves up and then gets back up on here, then we'll likely see Monday push up as well. So our bullish weekly cycle was to see Thursday as bear day and Friday and Monday on the upside. So anyway, we'll keep that in mind, and that what happens if this price here goes, what the pattern will be, and that's simply a move down into the 54.50 area here for a bounce that would try and retest probably not way up here, but whatever high consolidates in here, this is where it'll come back and check it. So a 50-60% retracement level. Alrighty, that's it. So enjoy the weekend. Cheers.